Bitcoin fell by another 3.8% yesterday. In today's video, we're going to be jumping down into the technical analysis on the 1 hour, 1 day, and 1 week's time frame, sharing my thoughts and opinions on where I think Bitcoin is heading. Let's roll that intro and get right down into it. Okay guys, here we have Bitcoin paired up with USDT. This is the 1 hour Binance chart, and as you can kind of see here, we have moved down to the lower range expectations that we had. This is basically between $40,523 and $40,937. Okay, and this is looking at us with the rejection of our trend line. So as you can kind of see, we started this upward trend line down here on this low side. We then started to rally on up quite strongly. We found that there was this upper high at $43,475, and then we came crashing back down, and we created this upward trend line with good support being found right down here at the $41,400 level. We then rallied back up again, but failed to breach the existing high of the $43,475, and then we came right the way back down, trying to test to see if we could find support on the trend line. We could not. We broke down lower than the trend line into the range that we had expected, and then we turned that interesting area of support for a trend line into a resistance trend line. We then can see that we tested this 3 times yesterday, well, 3 times over the last few days, and basically we can see that we got rejected each time. From here, we move right back down into the range that we were talking about previously at 41,605 to 41,798. We found brief support here, but ultimately with the rejection being found on the 200 EMA, the 50 EMA, the 50 SMA, we started to see rejection all the way back down. Here we can see that we obviously tapped into that low range as we were kind of talking about 40,523 to 40,937. Now, for the most part, I believe this is going to be where we find ourselves kind of finishing off. I think we've got potentially just a little bit more to go. Yeah, I'd say we've got a little bit more to go to the downside, just tapping into the slightly lower range here, kind of finding ourselves a double bottom with where we started our trend line to the upside. So I'll be looking at around this area of 40,555 to kind of be the area that we kind of move down into and to complete out our structural points before we start to rally on up. Throw some smart money concepts into the mix here. We have finally got a break of structure to confirm that we are in fact in our bearish structures. So as I was talking about a few days ago, we had our change of characterization out of our bullish pattern into a bearish pattern, and over this side we got a break of structure. That break of structure confirms that we are in fact bearish. Okay, so obviously a break of structure, it sounds kind of counterintuitive. It tells you you're breaking a structure. So how can you confirm that you're in a bearish pattern if you had the change of characterization that was bearish and then break of structure was, it kind of indicate to us, at least from the wording, that it would change that back into a bullish pattern, but it's not. It's actually confirming that you are bearish. And this is simply because I prefer to kind of think of this more of a continuation of the trend CTS kind of scenario rather than break of structure BOS. It is unfortunate that is the terminology that is used within smart money concepts, but the colors help you understand what they are, right? So change of characterization is red, basically bearish, and the break of structure is red, it is bearish. So it's confirming that we are in fact in this bearish structure. This happened once we closed lower than this over here, this test of our trend line over on the left hand side there. So for the most part, everything here is kind of as we were kind of thinking, but that's really bad and negative news, I think, is actually a bit of a false flag. I think we are likely to see a bit of a resurgence back to the upside here on BTC. Okay, we'll finish this move off, and I think we'll start to see a bit of a lift back upwards again. I expect us to probably look to breach higher than 43,475, which is our current swing high here. I would expect us to try to breach up higher than that because we do not have the correct structure, in my opinion, for us to think about moving down a little bit deeper at the moment. All of everything that I'm seeing here from a price action point of view is actually quite short term. It's very short term corrective bearish or bearish patterns, yes, but not really lining us up for those bigger drops that we're expecting to see. I think all of this is short term and we're likely to see another lift up higher. I think we're going to end up somewhere, and this this sounds really awful, but somewhere really in this little yellow box between the 43,475 and $44,700. That's going to be where I think we're going to end up. It's quite a bit of a gap. I don't expect us to be massively higher than 43,475, but I do expect us to be somewhere up in that little range. That's going to lift our stochastic RSIs, which are oversold on the daily, 8-hour, 4-hourly. Up into an overbought area so that we can continue this move to the downside. That's going to be my thoughts and opinions on that one. And so for the most part, I think our hourly chart, has progressed kind of nicely. And as we were kind of talking about over the last few days, we kind of hit both our target ranges here. The first one we bounced up from, we moved down, we got right back into here, we bounced from it, then we broke down to the lower range as well. So everything's kind of moved along nicely. Let's take this up into the daily time frame. So the daily time frame has this broader range between 42,401 and 44,146. And that's kind of we tapped into and we kind of got rejected from, right? So we can see this here. I expect us to move back into that slightly higher range, again keeping below $44,700, but ultimately back up into our little range here. This is going to be our correction before we see a bigger corrective move back down, where we are looking for the 50 EMA, 50 SMA to see whether we can find support. These are coming in at the moment at the 38,498 and 38,526. So we know that there's a lot of support to potentially be found here. We also have this interesting zone between 39,600 and 40,000. That should hopefully be a good area of support as well. Once we lose all of that, though, I do think we will, we're probably going to be moving down more towards the 35,735 and 37,653. That's going to be this fair value gap that you see just here on the chart. Once we kind of move our way through there, equilibrium is an interesting point at 34,310 to 35,320. Once we're kind of through equilibrium, we are, of course, down towards the 200 EMA at $32,000 and the fair value gap at 30,248 and 32,832. So ultimately, what I'm thinking here, guys, is that we're going to kind of work our way down through some of these gaps as we start to see profits getting taken off the table. We've been through this a number of different times. There isn't a lot of data on chain to support the idea that we're in a bullish market. And ultimately, I think we're just getting to that point now where we're likely to see profits getting taken off the table as we kind of get closer and closer to January. Now, obviously, a Bitcoin spot ETF, I've said many times before, and I'll say it again, I reckon is going to be a sell the news event because there isn't going to be a product that is launching on approval. We got approval, you have to wait 3 to 6 months, in my opinion, before a product will actually launch. And so therefore, we're more than likely going to see this sell the news event with this huge delay as people thought billions of dollars were coming in instantaneously on an SEC approval. That is not going to be the case, and we're going to see this kind of 3 to 6 month lag, and a lot of people will basically be selling the news, taking the profit off the table. You'll see a lot of retail investors getting wrecked as a result of that. So my expectations are that we kind of see a bit of a bouncing situation going wrong. Retail investors will, of course, try to buy and try to stop, price collapsing down. But ultimately, my expectation is that we do move on down through the next few months, and there will be the occasional bounce as well. Okay, so just bear in mind, it's going to take some time. This is not going to be quick. I reckon we've kind of got until March of bouncing around, and that's going to probably be at the earliest before we actually see any kind of major ETF related things or even a Bitcoin halving. But we know that has very little impact on price action. So overall, we are where we are with our daily time frame. There's no divergences to be seen either. We are, still looking to see how kind of price reacts. We've got the RSI still quite high. It's around the mid-level, and so that can come down a bit more as well. So again, that's not inclusive or anything like that over what is going on. We can, of course, see volume profiles are very, very low. They have not changed. Most recently, though, if we zoom in here, volume profiles have decreased as we've had this most recent move to the downside. Hence, I suspect that we're likely to see a bit of a deliver a move back to the upside shortly. So all in all, nothing much more major going on that daily time frame. Take it up to the weekly. Again, because these are large macros, not a lot's changed over the last few days. We can see here we have been rejected. From here, we obviously got a bearish red weekly close, which is the first one in 1, 2, 3, 4, 5, 6, 7, 8 weeks. And again, I was saying you cannot sustain, keep going green. You have to have some red in here. And we have seen the first red weekly candlestick. I expect we'll find a lot more from here. So yeah, I think there's not too much on the weekly chart to discuss outside of what we've already been discussing. We can see the downturn just a little bit here, but still overbought, meaning we've got a lot further to the downside to go. The momentum is supporting sell-off at the moment. We can see there's no additional divergences, but heavily overbought on the RSI. Again, we're looking to see this collapse down. We haven't been this high on the RSI, guys, since we were over here. In fact, yeah, up here at the January 2021. Okay, we haven't been this high since then. And even then, we started to correct down as we kind of reached up into the $65,000 area. So it'll be interesting to see how price reacts here, but we can see that this RSI, it's high, and chances are we're going to see big corrections. So just bear these things in mind. And obviously the volume profiles are again non-existent. Even you can just see on the weekly time frame here versus the bull market, where volumes are very, very high, versus a bear market where volumes have come down, and versus this rally where volumes are pretty much lower than the bear market. So interesting to see how times do change and everything, but for now that is where that one sits. So yeah, I think, guys, it's going to be a brief video today. We're not going to make this one a 20-minute video. I think we're just going to kind of wrap it up there. There isn't terribly too much more to talk about right now. We'll keep a close eye on things and obviously give you another update tomorrow. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will not miss another video update. Until the next one though, guys, have a fantastic day.